G'day mate, thanks for the comment. So I want to give you a little bit of an explanation of the difference between income account and capital accounts. There's basically three buckets here when we're talking about an investment bond, so let's give you a little bit of a crash course. So this particular person just made a comment about trading and paying not a lot of tax. So when you trade, particularly if you trade as a business, all of your gains, irrespective of duration of your trades, is going to be taxed as income, typically speaking. So what that basically means is that you will be taxed at your marginal tax rates. Now, if you are trading as an individual, those marginal tax rates can go anywhere up to 46.5% tax. If you're trading in a company, if it's for investment purposes, 30%. If it's actually a company and you're trading for a business, it'll be 25% tax, which basically is the same as a long-term capital gains tax rate in a worst-case scenario. Now, capital gains on a capital account, if you're trading for that capital gain, it's not a business, that you are entitled to get a 50% capital gains tax discount if you hold that investment for more than 12 months. I suspect if you're trading, you're not, but if you do, then you get a capital gains tax discount, which basically means it's cut in half. And let's assume that you are still in the top marginal tax rate, you'll pay about 25% in tax. Now, the great thing about the investment bond, particularly if we're investing in things for the long term, is that we are not realizing any gains because if it's an index fund, it's got very little realizable gain. We hold it for more than 10 years and it becomes capital gains tax free, which basically means that we pay pretty much no tax throughout the duration of holding that bond, very little tax anyway. So trading is a business. Assuming that you're trading profitably, you've got to realize that you will pay marginal tax rates. So the more that you trade and the more income that you earn, you're going to keep working through those tax rates. There's potentially going to come a point in time where you may need to set up a company. We've got a number of clients who are professional traders and they typically trade through a company so they can cap their tax at 25% if it's a business. I hope that makes sense. Any questions? Let me know. Thanks for the comment.